In this video, I'm going to demonstrate a trading strategy which takes breakout trades during the middle of the week. So if we see breakouts to the upside or the downside, which occur just on a Tuesday, Wednesday or Thursday, then we take the trades. However, if we see the breakouts occurring on a Monday or a Friday, then we ignore that signal. The idea is that markets tend to behave differently on the day before and after the weekend than what they do during the middle of the week. And I got this idea from Kevin Davey, so thanks for that idea, Kevin. It won't be a long video today, but I was playing around with this entry idea and I thought I'd just pretty much turn the camera on and show you what I'm doing. I start by programming the entry and then I test it out on a few different markets, and if there's some markets where it shows promise on, then I'll take them and go further, apply different exits, maybe a stop loss, and fine-tune the overall strategy and see if I can come up with something which I like and has potential to trade. The strategy itself is simple. Like I said, it'll only take trades on a Tuesday, Wednesday and Thursday. So at the end of the day, we want to look at the daily bars and then we want to see if the high is the highest high over the last X bars, let's say 5 bars or 5 days, and also that the close is the highest close over the last 5 days, then we go long on the next bar at the open. And the opposite for short trades. So we are going in the direction of momentum for a short trade. If the low is the lowest low over the past 5 days and the close is the lowest close over the last 5 days, then we can go short on the next bar at open. We're going to start by using 5 days for what I'm going to call that look back period, but we will test to see if there is a better period, maybe 2 days or 10 days works better. We'll see that in the testing. For the exits, we're going to start with no exit whatsoever. Well, we will have an exit because the exit will be an entry for a trade in the opposite direction. So that will be what we call a stop and reverse type exit. And then I'll apply a couple of different exits. I'll probably use a fixed bar or a fixed day exit. So exit after 3 days, 5 days, 8 days, we'll test that. And also probably a first profitable close. So at the close of every day, see if we're in profit. If we're in profit, we'll take the profit and exit the trade. And I'll also be applying a stop loss. I'll be using a fixed pip stop loss. However, this is a momentum or a trend type strategy. So a trailing stop loss may actually work quite well too. However, in the study that I'm going to show you, I haven't used the trailing stop yet. So let's go and have a look at the computer and see what I've discovered. I'm going to start with the basic strategy with just the basic exit, so the stop and reverse, or in fact no exit. And we're going to be using a look back period of 5. So we're looking for higher highs and higher closes over the last 5 bars. And I'm going to run that basic strategy on 5 different markets that I've got here. I would normally run it on about 10 different markets, but I have found a market which does show some promise. So once I've run it, the basic strategy on the 5 markets, if any of them show promise, which one of them has on pound yen, then I'll start to look further into that market, adding the different exits, stop losses, etc. And I'm going to start with some in-sample data from 2008 to the end of 2018. And then that will leave me 3 years worth of unseen or out of sample data, which isn't in this test, to then apply the final rules to the strategy to see how it performs out of sample. So let's have a look at the equity curve applying this basic strategy on these 5 markets. Let's start with pound dollar. That's what the equity curve looks like, and it's pretty awful. In fact, that's so awful that I might even consider reversing these rules later on and creating a strategy for pound dollar with the reverse rules. The next one is US dollar, Japanese yen. And that's actually showed some promise recently, but over that whole data set, it isn't particularly nice. This is for euro dollar. Euro dollar's been working quite well up until mid 2015 and then has gone downhill. Possibly might be able to work with something on that market. However, I am expecting this strategy to work better on the yen pairs. Euro yen, let's see how it works on that one. And I mean, it's going up in the right direction with some big drawdowns along the way. But the final one, which I thought showed the most promise, was this on pound yen. And that's what the equity curve looks like. Again, there's some flat periods and some drawdowns, but even right up to the end of this sample period of data, it is making new highs. So we're going to carry on and take the development further using pound yen. So in this workspace, we have the pound yen strategy. And now I've actually added in some costs as well. I've got 6 pips worth of costs in this strategy, okay? So the first optimization, which I did, was looking at that look back period. Remember I say we want to see the highest high over the last 5 days and the highest close over the last 5 days to go long, and the opposite for short. Well, this is the results from 5, and I've checked from 1 through to 10. And we can see 5 makes 12 million. It is a good number. However, perhaps if we went 2, 3, 4, we would get better results. So 3 or 4, let's choose 4 and see if that has improved the equity curve. And that has improved the equity curve. So I'm happy to use 4, and it was kind of in the middle of some decent results too. In the next workspace, we're going to look at using a simple X bar or X day exit. So exit after 2 bars, 4 bars, 6 bars, etc. And I've run the optimization from -1 as an input. That's what we've just seen, the stop and reverse strategy, which makes 12 million. Then exit on the same day, and then after 1 bar, 2 bars, all the way through to 25 bars. And seeing as we're making 12 million with a stop and reverse, we don't really see any significant improvement in the net profit by using a fixed day bar exit. No improvement really in the net profit, in the percent profitable, or the average trade really. So I'm not going to use the X bar or the X day exit. I'm going to stick at the moment with the stop and reverse. I do also have a volatility filter built into the code, which I took from Kevin's idea for this original strategy, which says, don't trade if the average true range is greater than a certain amount. It could be 100 pips, 200 pips on the daily average true range over a 14 period. However, I did do an optimization. I did look, and I couldn't find any benefit to using an ATR filter for this pair on this strategy and time frame. So we're just going to be taking all trades and disregarding that volatility filter. Next, we're going to be looking at the first profitable close, and I've included a day delay. So if I use a day delay of 5, I'm saying we want to be in the trade for at least 5 days, and then at the close of every bar, if we're in profit, then take the profit and exit. If we're not in profit, leave the trade running. You've probably seen this exit used by me lots of times. But before we do that, if you like this type of strategy, then at the moment I'm giving away my 22-page Beat the Market strategy guidebook. And I've got another 3 strategies, rule-based strategies, a little bit like this one. If you find the link in the description down below, you can get that for free at the moment. So let's have a look at this first profitable close exit. And here's the optimization called day delay. So -1 is not using it whatsoever. If we use 0, then we're exiting even on the day of entry if we're in profit. If we're using 5, then we're saying wait 5 days, then look every day. If we're in profit, exit. If we're not, leave the trade running. And it's a similar story to the X day exit or the X bar exit like we saw before. We're making 12 million without any exit, and then we don't really see much of an improvement. We got 13 million there. It's probably just a bit of a fluke. So for this strategy, I'm going to stick with just the stop and reverse because I don't see any benefit of using the first profitable close exit. And that's probably because we're in a trend type strategy. The first profitable close works very well when we're looking at sort of counter trend strategies. When we're in a trend following strategy, we want to ride that trend for as long as possible, and often getting out of the trend when there's a signal to go in the opposite direction is a really good exit. So the next thing we want to look at is a stop loss. So I've optimized for a stop loss between 0 and 7. This is 700 pips. So pound yen does require quite a large stop loss on a daily time frame. And none of the stop losses really improve the strategy, although these around 450, 500, 550 are ever so slightly better in the net profit. I think I want to choose something like 450. And I don't expect much difference in the equity curve. So the last thing to do is apply this strategy to the unseen or the out of sample data from 2019 through to the end of 2021. So we've got the look back period at 4 and we've got a 450 pip stop loss. And there's the equity curve. And if I hover, we can see data from around about this point here to the right hand side is all of the out of sample or the unseen data. We're obviously making more money. We're making almost another 4 million yen. I haven't looked at the average trade. The average trade is 47,000 yen. That's 47 pips. That's quite a decent average trade. And we've also got some costs added in there as well. Largest losing trade, that's our stop loss value. Percent profitable at 45, typical kind of trend following strategy type percentage. Actually, out of interest, let's just look at the unseen data on its own. So from 1st of January 19 through to the end of 2021. So all of this data is the out of sample data. And that's what the equity curve looks like. So that's pretty good. As usual, I won't jump in and start trading this strategy immediately. I might try that trading stop loss, and then I'll watch the strategy for another 3 or 4 months, see if it continues to perform in true unseen data. And I'll also perform a walk forward optimization or a walk forward development. And if the results are good from the walk forward, then that will give me more confidence that this is going to continue to work into future unseen data. So that's about it for this video. I hope some of you have found this useful, watching me take a simple idea and then applying it roughly to a few different markets, see how it works, and then once I have found something that shows a little bit of promise, then taking it further, applying different filters maybe, applying different exits, stop loss, see if I can make a more complete strategy. And if you have any comments or questions, then please leave them in the comments section down below. But until the next one, this is Jared Goodwin, and thank you.